Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will be speaking on the FNOQs. I'll take you through the normal trade setup. So let's first look at the SGX Nifty. The last time I saw it was up 22 points. It's moved higher. It's up almost 28 points. So the Nifty futures probably can expect an open above the 10,500 mark in trade today. The ADR setup was also good. If you're looking at the ADR, Tata Motors in ADR ended up almost 3.5% higher. Most of the other ADRs also did well, be it an ICICI Bank, be it a Vedanta, or be it an HDFC Bank. So Vedanta, ICICI Bank gained 1.5%. HDFC Bank was up almost 1.3%. The big talking point will be crude, and crude moved up significantly. Crude surges almost 3.5% in overnight trade. Significant amount of developments happening in the Saudi Kingdom, and that is actually causing crude to surge. Brent crude is trading about the $64 barrel per mark, and yesterday we were talking about how WTI is trying to inch near the $55 barrel mark. It's about the $57 barrel per mark. So significant amount of traction seen as far as crude is concerned. Now, the other commodities also were very strong. Strong close by the base metals on the LME. Some of the base metals that moved significantly. Copper was up higher by close to 1%, but there were other commodities that did even well. So nickel was up almost 1.5%, and lead was up almost 2% in trade. Even COMEX copper is currently trading with a positive bias in China. Most of the base metals in China have opened with a positive bias. So copper, iron ore, rubber, all these stocks, all these commodities are doing well. So copper is up 0.7%, iron ore is up almost over 1%, and rubber is trading up almost 0.8%. So that's the cue that's coming in from the commodity space. Gold is trading muted after a 1% overnight move that came in. As far as flows are concerned, FIs are net buyers to the tune of 576 crores. DIIs was net sellers to the tune of almost 263 crores. But even if you look at the month-to-date basis, FIs have been heavy buyers. They bought in almost 3,000 crores, and DIIs have sold in excess of 1,000 crores. They've sold in almost 1,300 crores in the cash market. Now, the VIX was the big talking point yesterday. Despite a muted close yesterday, the VIX was up almost 10% in trade. What did well was basically, some of the auto stocks as well as IT sector, so they did well in trade. What didn't do well was the energy sector. So the Nifty Energy and Nifty Bank traded much lower in trade. What was the general setup? The Nifty ended absolutely flat. So you had movers on either side. So Tata Motors ended at almost 7 points. Reliance was down, contributed 6-point down move. So Tata Motors, TCS, ONGC on the positive side, Reliance, L&T and IndusInd Bank on the negative side. But Agam's here. You can come back in the frame now, Agam. What's the FNOQ like?
Well, as you can see, Darshan, we've seen flat moves for the Nifty. And again, considering the fact that it's stopped at and hasn't moved too much around the mark of 10,450, we can see that there's been very little change in open interest. But when it comes to the Nifty Bank, despite the fact that there really hasn't been too much change in the index itself, we have seen more accumulation in the Nifty futures, up as much as 6.5%, at least as far as OI goes. But in terms of the India Volatility Index, that's the one where we've seen a surge. Now about the mark of 13, it could be a matter of concern for some of those bulls, at least in the short term. But, considering the fact that Nifty is been where it is, the Nifty put call ratio has only inched up slightly to a certain extent to around 1.55. But in terms of the changes in OI when it comes to the Nifty, we are looking at a lot more writing and further accumulation in the 10,600 call, a lot more writing coming in the 10,400 and the 10,500 puts as well. But there are three stocks that we are keeping an eye on which have moved into the band. We have Divan Housing Finance, Infibeam as well as Wockhardt. We are looking at fresh longs building in. Nestle India up as much as 27%, 26% when it comes to open interest. And on the other hand, weakness seeping in SRF. The stock's down around 2.2% and the open interest has surged near 12%. So keep an eye on that one as we move into today's day of trade.
Stock of the day is Gujarat Industries and Power. Good operating performance coming in from the company. Revenue growth though remains muted at 2.6% YOY basis. This is the rise at a figure of around 323.7 crore as compared to 315.5 crore in the base quarter. While net profit has also risen as much as 5.5% at 53 crore as compared to a figure of nearly 50.5 in the base quarter. Now there is an impressive performance coming in on the operational operational front of the company, the EBITDA has grown as much as 26.7% at 119.6 crore as compared to a figure of 94.4. Margins have also expanded at 37% as compared to 29.9% in the base quarter. What goes behind the making of good numbers? Well, higher sales as well, the operational efficiency of the company despite the revenue growth. Now, overall expenses have come down by 8% on a year-on-year basis for this quarter in this company, while the decline in the raw material cost as a percentage of sales combined with your generation expenses and other expenses has led to the operational efficiency. Now, raw material as a percent to net sales has come down. The cost has come down to 44% as compared to 48% in the corresponding quarter, while the generation expenses have also dropped to 9% of your overall revenue as compared to 11% of your overall revenue seen in the base quarter. Just to give you a little background about the company, while it's a Gujarat-based, Gujarat government-run company and has a market capitalization of roughly 2,100 crore with
Well, the Indian rupee ended at its weakest level in nearly a week, falling 30 paise against the dollar to close at 64.68. In fact, the surging oil prices and a sudden spike in capital outflows were said to be triggering the volatility that we saw in the Indian currency market. Now, according to NSDL data, global funds reduced rupee debt holdings by about $125 million yesterday, and in the non-deliverable forwards markets, the USD INR is trading at 64.80. When it comes to the yields on the 10-year government bonds, they spiked about 3 basis points to end at 6.893%, again making fresh 6-month highs. In fact, yields even crossed the 6.90% level briefly on an intraday trade basis yesterday. So the movement in crude oil prices from here and the IIP data that comes out later this week could probably provide some cues for the Indian bond and currency markets.
Okay, Cipla will be reporting its numbers today. It's the only Nifty company that will report numbers. We are seeing a top line growth of almost 7%, bottom line growth of 13%, margins coming in at 18.8% versus 18% last time around. Now, basically, we are seeing strong traction coming in as far as the India market is concerned. So on a YOY basis, we are seeing a 25% growth in the India business. South Africa should grow by almost 15%. North America will grow by almost 3%. So that is the cue that we are getting in. India sales will be much higher due to restocking post the GST implementation that has come in. India Cipla is primarily focused big on the Indian market, so that will help them significantly. The US business to be slow on account of pricing issues, and basically they have no new launches that are there as far as the US market is concerned, so US will be rather muted. The product mix will be favorable this time around, and that may aid the margins for the company going ahead.
HDFC Standard Life's IPO is going to open today, and the company is looking to raise as much as 8,695 crore rupees at a price band of 275 to 290. Now, at the upper end of the price band, that is 290, the company will be valued at more than 58,200 crore rupees. Now, this complete offer is an offer for sale where both the promoters will be partially diluting their stake. Now, the listed NBFC, that is HDFC, will be diluting around 9.5% of its stake and will be gaining around 27 times its investment done in the company in the last 17 years. Now, Standard Life, that is the UK-based company, will be diluting around 5.4% of its stake and will gain around 7 times its investment in the same period of time. Now, if you compare HDFC Life's business with that of its competitors, then it generates most of its revenue from bancassurance partners. Now, it has around 125 bancassurance partners which contribute around 51% to its revenue. The 40% it generates from direct sales and the remaining from agents and brokers. Now, if you see the embedded value of the company, which means the net asset value plus the present value of the future earnings of HDFC Life for the second half of financial year 2018 stood at around 14,000 crore rupees, which was lower when compared to its peers. And if you see the asset under management of the company, it stood at around 99,500 crore rupees, again lower than its peer, but it grew at a faster rate when compared to ICICI Pru and SBI Life. Now, the asset under management of HDFC Life grew at a rate compounded annual growth rate of 23%, while that of ICICI Pru at 12% and SBI Life at 16%. Finally, coming to the valuations of the company, the shares of HDFC Standard Life are offered at an expensive valuation when compared to ICICI Pru and SBI Life. The price to embedded value at the upper end of the price band, that is 290, stands at around 4.2 times, while price to book value stands at around 13.1 times. Now let's hear what Manmohan Singh has to say on demonetization.
This week marks a year since the government announced demonetization. In an interview to me, former Prime Minister Dr. Manmohan Singh speaks about the impact of demonetization on the broader economy and the challenges facing the nation as we look forward. Dr. Singh was uncharacteristically vocal in his opposition to demonetization when it was announced a year ago. I asked him how would he assess the impact of it now, 12 months later.
Dr. Singh says, and I quote, "Slowing GDP is merely one indicator of the economic damage. Its impact on the weaker sections of our society and business is far more damaging than any economic indicator can reveal. One immediate manifestation of the damage has been on jobs. 3/4 of non-agriculture employment in our country is in the small and medium enterprises sector. This sector has been hit the hardest due to demonetization. Therefore, jobs have been lost and new jobs are not being created. I also worry about the longer-term impact of demonetization. Headline GDP may well start to show an improvement after the recent lows, but rising inequality has been a constant threat to our nature of economic development. Demonetization may exacerbate such inequalities, which can be harder to rectify in the future."
The government has subsequently come out with other objectives for demonetization, such as a cashless economy or a digital economy. I asked him how important are these as economic priorities for our nation.
In reply, Dr. Singh says, quote, "Objectives such as a less cash or digital economy are laudable pursuits. But we also need to get our economic priorities right. It is unclear that these goals of cashless economy will indeed help small enterprises become larger and achieve scale efficiencies. That should be our priority. These small and medium enterprises are the backbone of India's economy and labor markets. It is unwise to sabotage this sector in some rhetorical pursuit of a digital economy. Any behavioral change cannot be coerced or forced. It has to be nudged and incentivized, as behavioral economists have found. Digital or cashless economy is a mere post facto justification for what was fundamentally a flawed economic policy.
Economic measures such as GST, demonetization are often touted as hard pills that India must swallow to formalize its largely informal economy. Is formalization a necessary condition for long-term sustained economic growth? If yes, what is the best way to achieve it?
Dr. Singh says, and I quote, "The value created by the informal sector will be captured in the form of income, wealth, or consumption effects. Hence, we must be cautious about the sweeping generalizations about the informal economy and passing moral judgments about the entire sector. Having said all this, it is very important for a nation such as ours to build strong state capacity to lift our standards of governance. This is possible only when we increase our share of tax revenues. If formalization of the informal sector means a widening of the tax base, it should be welcomed. But the means is as important as the ends."
Dr. Singh spoke about the importance of institutions. He is also a former RBI governor. I asked him about the impact of demonetization on institutions of policy making and governance in the country.
On this, he says, quote, "The Reserve Bank of India was bypassed and overshadowed in one of independent India's most significant monetary policy decisions. This is a cause for concern. I am not for a moment implying complicity of the RBI, and I am very sure that the RBI did not have a choice. I am equally confident that the governor of the RBI will strive to regain credibility and independence of the institution. but I'm very concerned about the creeping culture of erosion of institutions in other spheres.
Dr. Manmohan Singh famously warned that demonetisation could derail economic growth by 2 percentage points. I asked him if he feels vindicated now.
This is not about vindication, says Dr. Singh. He adds, and I quote, "In fact, I strongly feel the time for politicking over demonetisation is over. It is time the Prime Minister graciously acknowledges the blunder and seeks support from all to rebuild our economy. There comes certain moments in a democracy's history when economics should take precedence over politics. It is one such moment now in India."
Amongst the stocks that you're tracking today morning includes Tata Chemicals, which will be selling its phosphatic fertilizers business for 375 crores. The company has said that it will involve the transfer of the Haldia business, but it will retain any outstanding subsidy amounts that are pending. That apart, we're also tracking Muthoot Capital, which has launched its QIP book to raise about 200 crores. Now, according to the mandate copy, the price band has been set at 601 to 610 per share. That's a good 7% discount to yesterday's closing price. Mercator has also launched its QIP issue, and they have set the floor price at 44.65 per share. That's about 1% premium to yesterday's closing price. We also have Reliance Communications, when the company said that they are selling their entire DTH operations across India to Vcom Media and TV. They haven't disclosed the consideration for the same, but additionally they also said that they're not paying their lenders and bondholders for the time being, given that the company is under the standstill period till December 2018. So that's Reliance Communications. Axicates Technologies as going to be acquiring Mistral Solutions for 175 crores. Now, this is a Bangalore-based specialized embedded technology company, and at the price of 175, Mistral gets valued at about 1.3 times their FY17 revenues. We're also tracking Sagar Cements. They have shared their October production numbers. Production grew 15.5% in October, while sales grew about 24%. So we could see some positive reaction on that one. So these are some of the stocks to keep an eye out for.
The government has reconstituted the multi-agency group to probe the Paradise Papers leak, the Central Board of Direct Taxes said in a statement. Remember, the multi-agency group was constituted last year after the Panama Paper leaks happened, and it would also be headed by CBDT Chairman Mr. Sushil Chandra, and would have representatives from CBDT, Reserve Bank of India, Enforcement Directorate and Financial Intelligence Unit. CBDT Chairman Mr. Sushil Chandra told reporters today that CBDT has informed officials about individuals whose name featured in the list, and these officials would take cognizance of these revelations. They would also examine returns filed by all these individuals and corporates and examine whether they have done adequate declarations in their returns. As far as Panama investigations in the Panama Papers is concerned, investigations done by the Income Tax Department has revealed that undisclosed credits worth 792 crore rupees were found by the Income Tax Department, and tax assessment of this amount would soon be done. The Income Tax Department has also identified 147 cases on which investigations will be done and some action will be taken, while there are around 279 cases where any action cannot be taken. Interestingly, there are 7 cases of individuals or corporates to whom notices have been sent under Section 10 of the Black Money Act.
On brokerages, first we have is JM Financials on DCB Bank. Now, they have initiated coverage with a buy rating and a target price of 230, which suggests a potential upside of 27%. Now, increased synergies and efficiencies will drive the company's fee income going forward, and they're expecting the cost ratios of the bank to improve as the bank has now completed its expansion plans. And on the back of this, they're expecting the earnings to grow at a compounded annual growth rate of 25% over the next 4 to 5 years. Now, the bank's return on equity and return on on asset is expected to improve to 15% and 1.24% by financial year 2020 from 11% and 0.9% in financial year 2017. Now, consistent growth, healthy net interest margin, improving operating cost and strong asset qualities are the positives for this bank. Now, JM Financial has also initiated coverage on Federal Bank with a buy rating and a target price of 140, which suggests a potential upside of 21%. Now, Federal Bank's focus remains on sweating its existing asset post the expansion plans, and on the back of this, they're expecting the return on asset of the bank to turn around going forward. Now, going forward, the operating and credit costs are also expected to come off a bit, which would in return boost the company's return profile going forward. Now, the focus on digital transformation will also boost bank's return on asset. Now, the return on equity and return on asset is expected to improve to 13% and 1.02% by financial year 2020, while net interest margins are expected to remain range bound in the range of around 3 to 3.1% over financial year 2018 to financial year 2020. Now, JM Financial has also initiated coverage on City Union Bank with a buy rating and a target price of 185, which suggests a potential upside of just 13%. Now, they're expecting the margins to come off slightly, driven by higher competitions going forward. They're expecting the deposit accretion to remain stable and to grow at a compounded annual growth rate of 15% over FY17 to FY20. Now, they're expecting the CASA ratio will unlikely show a meaningful upside, but the asset quality for the bank will remain within control. Now, going forward, the credit costs are expected to come off for the bank, which will show an improvement in its earnings and will keep the earnings growth momentum on track. Now, JM Financial is expecting the bank to continue its steady growth plan, and according to them, City Union Bank is a healthy compounding play with a great bottom line visibility over the medium term.
The three stocks that have reported a sharp uptick in the deliverable volumes is A, Titan Industry, Infibeam, and third is the Indian Bank. Now, Titan Industry, a sharp uptick there. The stock rose as much as ended at a 19% higher. The deliverable volume is 317% higher at 43.43 lakhs as compared to a 10-day average. Total volume is also up at 53% for this counter as compared to its 10-day average. Well, what goes behind? Well, the stock has also touched an all-time high level in the previous session on the back of strong Q2 numbers, mainly on the back of good show by the jewelry division. Now, the stock has been rallying for 7 straight sessions, and the next on the list we have Infibeam. Now, that stock ended 11% higher. Deliverable volume is 100% higher at 51.96 lakh versus 10-day average. The volume is also up at 130% as compared to its 10-day average volume. The stock has been up for 5 consecutive sessions, has gained roughly around 40% during this period, and also hit a lifetime high in the previous session. Indian Bank ended at an 8.7%, ended high 8.7%. Deliverable volume up 100% at 18.39 lakh as compared to its 10-day average. Total volume is also up at 209%. This is on back of good, strong Q2 show. Now, if you see this, the NPA, the gross NPA, that's come down sequentially to 6.67% as compared to 7.2% in the previous quarter. Also, the net profit has been fairly decent and has registered a growth of around 11.4% for that matter.
Now, here are a few stories that you should consider reading on the website bloombergquint.com. On the first anniversary of the note ban, former Prime Minister Manmohan Singh told Bloomberg Quint in an exclusive interview that the current Prime Minister must graciously acknowledge the failure of the cash ban and seek help to rebuild the economy. Dr. Singh also said that it was unwise to sabotage the MSME sector of the country in some rhetorical pursuit of a digital economy. You can catch this interview all day on Bloomberg Quint. Anil Ambani-controlled Reliance Communications defaulted on a dollar bond interest payment for the first time. The interest payment of $9.75 million for the company's $300 million 6.5% notes maturing in November 2020 was due on Monday. The company is in a standstill period with its lenders till December 2018. Now, the Income Tax Department has picked over 20,500 tax returns for detailed scrutiny as their profiles before and after demonetization did not match. The department has also identified 1 lakh high-risk cases of alleged tax evasion for detailed investigation. This is a part of the first phase of Operation Clean Money that was initiated by the department on January 31st post-note ban. Let's now listen to Jay Thakkar of Anand Rathi for his views on the Nifty going forward.
If we are not seeing any breakout happening immediately from these levels, then we can see some consolidation broadly between 10,400 initially and thereafter 10,300 on the lower side to around 10,500 on the upside. I am not seeing any signs of a trend reversal from up to down just of now. So I would say that if at all we are seeing some dips or some profit booking, then that would just be a consolidation from the move which we have seen started from 9,700, but not actually the trend reversal. So I would say nothing to worry as of now. One can use this dips as a buying opportunity only till we continuously see this high tops and high bottom getting formed, as well as till the breakout levels are held, especially in the Bank Nifty, which is pegged at around 25,000 levels.
Well, that's all we have for you in this edition of All You Need to Know. Up next is Indian Open. Stay tuned. This is Bloomberg Quint.